Hello friends, good evening. Today I'm going to share the fundamental analysis of Ahluwalia Contracts India Limited, and you can see this company engaged in the engineering, contract construction, delivery state of the art, infrastructure building project for clients in India. Company has experience in the working in residential, commercial, institutional, corporate office, power plant, hospitals, hotels, IT park, metro stations, depots, and automated car parking lot for government as well as in private client. Offering the company's key point here as the market cap 5,000 crore, and the company's P is very good, is 20.7. Current price is 822, and dividend yield is very less. Company is providing very less dividend, 0.07%. Return on capital employed is 20.4, which is very good. Return on equity is 13.8. Face value 2. PEG ratio, price to earning growth ratio, is 1.84, which is higher than 1. Equity capital 13.4, which is very low, and this equity capital the company is never changing, which is very good. And if you talk about the face value 2, PEG ratio 1, and if you talk about current ratio is 1.89, price to book value 2.68, growth factor is 3, and if you talk about Piotrowski key is 7, and if you talk about return on asset of 5 years 7.35, debt to profit is 0.28, the company is having low debt. Altman J score is higher than 3, is considered as good. Equity shares is 6.7, and last 10 years back the same equity capital was there. It means company is never diluting their equity. That is very good. Solid check is 1, you can say. Now if you see here the last 10-year price, and which the company has touched around more than 1400 or 15, around 1500 price was there in the, you can say, around year 2024, and then the price was going down and coming around 800. Now trading 822 is the current price, but this company is having good potential to grow further. But always check with your advisor before taking any further decision on these stocks. Now you can see the company is having pros is nothing, but one pros is that debt free, and cons is companies having 13.9 over 3 years, contingent liabilities around 2,500, dividend payout around 1.55, which is lower in the last 3 years. Companies doing same business like Larsen Turbo, Rail Vikas, NBC is the construction for the construction India. And if you see that the company sales is highest ever, 1322 crore, which is very key point here. Second key point, company's margin is something not growing. If you compare to the March 2025, is around 9%, and their company's operating profit 124 crore, and after deducting all tax, EBITDA, everything, is coming to 82 crore net profit. Sales is growing, which is highest ever, 4,565 crore. Operating profit is also almost highest ever, 435 crore, with the margin of 10%, which is lower than the last 10 year back was the margin was. But company paying also 50 crore interest, and depreciation 98 crore. Profit before tax is 359, and net profit is also 266 crore overall. The company's compounded profit growth in last 5 years is 28%, but companies, if you see the company's compounded sales growth is 18%. And if you talk about the stock CAGR for last 5 years is around 17%, but last 10 years is 11%. So there is a very good potential to grow further. Return on equity last 5 years 15, 10 year 14. And one of the important thing in the balance sheet is equity capital is never changing, 13 to 13. Reserves are growing. Earlier, like you can say in March 2015, the reserve was 324, but now it is 2046. Borrowing also very less, just 73 crore. Other liabilities are some there, like around 2133. So you can say overall total liabilities as present is 4,265. Similarly, companies having other assets in which the trade receivable 733 crore, cash equivalent 817 crore, and loan and advance 259. So, and you can see here that the company's cash operating is 281, and net cash flow is negative right now. And if you can see here, the debtor days is decreased to 59, inventory days 57, also decreased. That both are good indication. Days payable is 135, cash conversion cycle -20, and working capital is 55 days. So return on equity is company has increased from the last year to 18% to 20%. And one of the important thing here, the promoter is never selling a single equity of this company, never diluting the stocks. So very strong management. FII increased their in very important key point here. The FII increased their stake from almost 12% to 14% in last 4 to 5 years. And DII also you can say in very flat, not too much but less decreasing. Public holding also almost decreased from last year but increased overall. So this is the overall analysis for this Ahluwalia contract. So please contact your advisor before taking any buying and selling of the stock. Thank you for watching this video. Have a nice day.